Hello everyone, welcome to our second lesson. In this video, we are going to learn about the basic accounting equation. The name may sound difficult, but the idea is actually quite simple. We will learn about business transactions, assets, liabilities, and equity. We will also see how daily business activities can change the financial position of a company. So do not worry if this topic is new for you. We will learn it slowly, step by step. Before we start the lesson, please complete the pre-test first. You can scan the QR code on the screen and answer the questions. You have about 5 minutes. Do not worry if you are not sure about some answers. This pre-test is only used to check what you already know before the lesson. Please answer the questions by yourself. When you finish, come back to this video and we will start learning the topic together. Let us start with business transactions. A business transaction is an economic event that can be measured in money and changes the financial position of a business. For example, buying products, paying shop rent, receiving money from customers, or borrowing money from a bank. These events must be recorded because they affect the company's finances. However, ideas, plans, and feelings are not recorded. They do not have a clear money value and do not directly change the financial position of the business. After we know which transactions must be recorded, let us look at the basic accounting equation. The formula is assets equal liabilities plus equity. Assets are the resources owned by a business. Liabilities are the debts that the business must pay. Equity is the owner's part of the business. For example, an owner starts a small business with 10 million rupiah. The company's cash increases, and the owner's equity also increases by the same amount. Because of this, the equation stays balanced. The accounting equation stays balanced because every transaction affects at least 2 accounts. This system is called double entry bookkeeping. For example, a business buys a laptop on credit. The company's equipment increases, but its debt also increases. So one transaction creates 2 changes. Later, these changes are recorded using debit and credit. For now, you do not need to worry too much about those words. The important point is that every transaction has 2 connected effects, and the accounting equation must stay balanced. Now, we are going to study the basic accounting equation in more detail. This equation is the foundation of financial statements. It helps us understand what a company owns, how much debt it has, and how much belongs to the owner. Think of it like the foundation of a house. If the foundation is strong, the next parts will be easier to understand. So even though the formula looks simple, it is very important in accounting. In this part, we will not only memorize the formula, we will also understand how it works. We will see why assets must always equal liabilities plus equity. We will also learn how business transactions change the equation. To make it easier, imagine that you manage a small business. Every time the business receives money, buys something, borrows money, or pays an expense, the accounting equation changes. However, both sides of the equation must always stay equal. The accounting equation shows that all business assets come from 2 main sources. They can come from liabilities or from the owner's equity. For example, a business has assets of 20 million rupiah. 12 million may come from the owner, while 8 million comes from a bank loan. When we add them together, the total is 20 million rupiah. This means every asset has a source. It can come from the owner's money, or it can come from money borrowed from another party. First, let us talk about assets. Assets are resources owned by a business that can give benefits in the future. Examples include cash, products for sale, computers, vehicles, buildings, and land. Current assets can usually be used or changed into cash within 1 year. Cash and inventory are common examples. Non-current assets are used for a longer time, such as buildings and vehicles. Even a smartphone can be a business asset when it is used to sell products or communicate with customers. Next, we have liabilities. Liabilities are debts or obligations that a business must pay to another party. Examples include bank loans, money owed to suppliers, unpaid salaries, and unpaid electricity bills. Current liabilities normally need to be paid within 1 year. Long-term liabilities can be paid over a longer period. Debt is not always a bad thing. Many businesses use loans to grow. However, the business must manage its debt carefully and make sure it can pay on time. The last component is equity. Equity is the owner's part of the business after all liabilities are deducted from the assets. For example, a business has assets of 50 million rupiah and liabilities of 20 million. This means the owner's equity is 30 million rupiah. Equity can increase when the owner adds more money or when the business earns a profit. Equity can decrease when the business has a loss, pays expenses, or when the owner takes money from the business for personal use. Now, let us see how different transactions affect the accounting equation. When a business buys equipment with cash, equipment increases, but cash decreases. When the business borrows money from a bank, cash and liabilities both increase. When the owner invests money, assets and equity both increase. When the company pays expenses, such as rent or salaries, cash decreases and equity also decreases. Each transaction has a different effect, but the accounting equation must always remain balanced. Let us look at some simple examples. First, the owner invests $1,000 in the business. Cash increases, and equity also increases by the same amount. Next, the business borrows $500 from a bank. Cash increases, but liabilities also increase. Then the business buys equipment for $300 in cash. Cash decreases, while equipment increases. The total amount of assets does not change. Only the form of the asset changes from cash into equipment. Now it is time to practice. Please scan the QR code on the screen and answer the questions. One important question is, do we record every event in accounting? The answer is no. We only record business transactions that can be measured in money and affect the company's financial position. Try to explain the answer using your own words and give a simple example. This will help you understand the concept instead of only memorizing the definition. We have finished the main lesson, so now it is time for the post-test. Please scan the QR code and complete the questions. You have about 7 minutes. Try to answer them by yourself and compare your understanding with the pretest. Are business transactions, assets, liabilities, and equity clearer now? It is okay if you still make some mistakes. The important thing is to know which parts you understand and which parts you need to study again. Great job, everyone! We have reached the end of this lesson. Today, we learned that accounting does not record every event. It only records business transactions that can be measured in money and affect the company's financial position. We also learned that assets always equal liabilities plus equity. Every transaction may change these components, but the equation must always stay balanced. Thank you for learning with me. In the next lesson, we will learn about different accounts and financial statements. See you next time.